Hi everyone, I'm Doug Alsdorf, and in this short video, we're going to have a look at bonds. In particular, we're going to have a look at question 8 in the quiz for chapter 12. As always, go to the WordPress page, and when you do, you can navigate to quizzes and find the chapter 12 quiz. We're going to scroll down to question 8. There's quite a few questions in this about bonds, and I really invite you to take your time because bonds are very, very important for your asset allocation and balancing against equities, in particular the passive index funds. But here we want to have a look at some bond funds and how well they performed over time. Now, in the question, I ask to understand the importance of bonds for a diversified portfolio. That's what I just said. Use the chart set up from the previous question, but now we're going to span from January 1, 2020 to 2021, and we're going to add SCHB to the plot. The three bonds that we're talking about are these right here. You see their names right there. And I invite you to look at the questions that are there and helps describe the differences between these bonds. So I went ahead and set up the bonds. You see that in here, I invite you to, in question 6, invite you to set them up so that they start on January 1, 2012. And here we go. We've started, in this case, January 4th, close enough, 2012. And we see the three different bond funds listed there on a daily basis. And this is their net asset value. So this is, reinvesting that interest that's being paid back to you on those bonds, reinvesting that. And we see that the green line is doing better than the blue line is doing better than the red line, which is to be expected given the makeup of those bond funds. But look what happened right here. Right here, this right there, and I'm sorry that Morningstar is putting that window that's moving with me, but that's okay. Right here in early 2020, that was COVID. Wow, did we see some sharp drop going on in that green line? What's happening there? Well, in here, what I suggest to you is that sharp change is a result of quick increase in Treasury interest rates in response to the panic selling that was at the start of COVID pandemic. And so here in question 8, we want to just have a much closer look at those. So reset the start to January 1, 2020 and the end of 1 year later. So we're going to go in here, reset this to January 1 of 2020 or thereabouts. It doesn't have to be exactly January 1. January 6th is fine. We'll start there and we'll set the end to 2021 in right there and set that on January. And again, January 4th is probably fine. Make certain it maintains the daily. Now, look what happens right here. That's COVID. That was the response. This is a high interest bond. We might call these junk bonds, for example. They're just high interest bonds. And so we see it had a very sharp response to the Fed raising interest rates. We see that the red one didn't have any response at all. In fact, it gained. And then the blue line had a very temporary, much lower response. So let's see what the question is asking us. The question is asking, oh, we want to add SCHB to the plot. And now it's asking us, well, how did SCHB do at this time? So we're going to add SCHB. That is Schwab's broad market fund, passively managed. In this case, it's going to reinvest the dividends. It's passively managed, very, very cheap. We're going to see how oh, man, it really dropped in response to COVID. And immediately we begin to see the reason why bonds are important to us, particularly the blue line and the red line had very little reaction to those changes in interest rates that were done very suddenly by the Fed to counteract the panic selling. So this is why we own bonds, because they don't respond typically the same way that equities do. So I hope this is helpful for you. Let's have a look at what the question is asking us. What is the value of SCHB in March 19th of 2020? March 19th of 2020. This is where it's helpful to have this window marching along with us. There's March 19, 2020. SCHB is at 7,300. So let's see what our choices are. 73.35, a loss of 2,700 or 27% decrease. That should be the answer. Let's scroll down to question 8 and what the answer is for question 8. And scrolling down, and yes, that is the answer. I invite you to have a look at all those other questions on bonds. This is really a critical quiz to go through to make certain you understand just how important bonds are for a properly diversified portfolio and allocating your monies amongst bonds and equities as far as your asset allocation goes. Thanks a lot.